Okay, hey you guys, it's Trisha with Easy Email Trade. So I'm going to do part 3 today, and today is a great day to go over gaining a better feel for the market because of the lack of follow through this morning. So let's go over what was going on. Okay, so we're looking at the daily. This is where price currently is. Our all-time high until this afternoon when it broke that 21 area was 21. So you can see yesterday we traded up to resistance and it held around that 79 spot. And then we closed down down in this area here at 55.50. And we're still sticking with the NQ. We'll just stick with this while we're going over everything, but again, apply it to anything that you trade. So we already have our areas of support and resistance drawn in on the daily. So let's fine tune it on the 15. So let's find the 15. All right, so here is where we were going into this morning. And now what I do is I'm just going to show you real quick. So this is my regular 15-minute chart, and I always leave all my support resistance on there because you're going to find that whenever price finds its way back to these areas again, whether it's a week from now, a month from now, 10 years from now, these areas are going to likely get a reaction again. So above 21, I had no price reference whatsoever because we have never been there before. So what I do is, since the all-time high was up there at 21, you could use floor trader pivots with midpoints. You can use fib price extensions, whatever you're comfortable with. It's totally up to you. I generally on the NQ don't use floor trader pivots with midpoints, just the pivot point. But in this instance, because I have no price reference above 21, what I did was I put whatever the next floor trader pivot was above that, which was 52.50. And as crazy as this sounds, you guys, this works. So what I did was I divided the space in half. So I'm just going to get rid of these two lines here so you can see. So I divide this space in half between the floor trader pivot up there and our all-time high, which gets us here at 36.25. And then I just divide it in half again because the chances of it, especially at all-time highs, running from 21 to 36 or 36 to 52 without any hesitation is pretty slim. So I draw a line right smack dab in the middle, and I'm going to do the same thing here, break this up in half, and then if there's still a lot of distance, break it up again. Divide it in half from 21 to 28, 28 to 36, etc. But this, crazy as it sounds, like I said, it works. If you notice where price is holding right in the areas where we've just divided those up in half, right here at 28.50, 28.50, where did it pop up to and pull back? 36.25. Now keep in mind, as we grind higher into new territory, it generally will pop and do a quick pullback, a pop and quick pullback. So that makes it generally difficult to trade into all-time high area or even the highs of the day or lows of the day if we don't have a strong direction. So if I scrunch this up, I've got years and years and years worth of support and resistance on this 15-minute chart. Just because, like I said, whenever and if ever price ever gets in these areas again, these are going to hold again. So I don't have to start from scratch every day on my 15-minute chart marking support and resistance. I may have to adjust them. So now, obviously, the area that we're trading, I just made up those areas based on floor trader pivots and dividing them in half. So tomorrow I might have to fine tune them, but if we're in new territory still and I don't have any price reference, let's say it's at around the all-time high again, then tomorrow I'll have to use the next floor trader pivot above today's high. So you could use, so let's say like tomorrow, let's just pretend it's 52.50 and then 60 and then 65. So you just put them all on there and then divide them in half. All right, so enough of that. So looking at our 15-minute chart here today, So looking at the 15-minute chart, here are all my support resistance lines, keeping in mind that the ones above this 21 area, actually this should be 21 because that was the all-time high. So this is what I started out looking at this morning. So again, we don't know that these lines above us are even going to work out because we've never been there before. But leading up to that, we had support and resistance areas all set up here based on the daily and our 15-minute chart. And all you have to do is, if price hasn't been in an area, like for example, up where it's at for a while, you just go back to the last time price traded in that area. So we have all these support resistance lines on our 15-minute, and obviously moving nicely. Well, I don't even want to say it's moving nicely. It's, you know, pop, pull back because of the new territory. But this morning, trading was difficult because of the lack of overall follow through, and you get in it and it whips right back on you. When you have a day like that, if you can't, if you don't feel comfortable with the size stop that you're going to have to use in order to, you know, basically not get whipped out of the trade, then sim trade, but stick to your rules, or, you know, just turn off your computer and come back tomorrow. There was also some discussion in Portugal with basically all the financial heads on the panel. So I don't know if that attributed to our morning, but either way, because you never know what is causing the market generally to act the way it does, you know, unless you already, then you know that there's a report coming out. So there's the 15. So looking at an entry chart, I've got a 1 1/4 range here. That's what Sierra will show. But basically, it's a 5 range chart. If the market's too fast for the size chart that you're using, then use a bigger chart. So like if the market is going very quick and you can't get your orders in fast enough, then go to a bigger chart. Just keeping in mind that going to a bigger chart is going to require a bigger stop. And I don't know if you recall, in the first 2 videos, I mentioned that if the market is whipping around, you want to be very cautious about taking trades, buying at support or selling at resistance, because just keep in mind, these are just general areas. So if you have a volatile market, let's just say this area of 95 1/4, for example, it can hold, but it could trade, you know, a few points away before rolling over. So be very, very cautious, okay? And this morning was definitely challenging trading. Going to just show you where we were. I have my no zone area around the round number, which I generally stay out of taking any trades unless it's a sideways market going from support to resistance, support, resistance, support, resistance. So we didn't really have that this morning. It was kind of all over the place. So you can always look at the market on a bigger time frame chart and take your entries off there. Obviously, this is a very small chart, so you'd be better off using in a volatile market like a 6 or an 8 range or even a 12 range, but that'll be for you to decide. So I just want to show you how, if you use a market profile chart, and this is Ninja, and this is on an 8 range. If you're not familiar with the market profile, just shoot me an email. I'll be happy to send you a webinar recording. I don't really want to go into all that right now, but basically the market profile, we have fair value, we have high value, and we have low value. So right in this blue area is fair value, and if we generally have a sideways market, it will go from low value to high value to low value to high value. You know, obviously you don't know how quickly that'll happen or how long it will take, but let's say like here where we're at this morning, we have an overall trend going into the open at 9:30, and you'll find that if we have a trend, it will use the high value area as pullbacks. pull back and hold, pull back and hold. Here it didn't hold, but once it tried to break down and failed and came back above it, you have to view this as a failed breakdown attempt because it's right back where it started from. So if, for example, you're looking for a way to get in a nice trending market. Now, again, this was choppy right off the open this morning, but as it pulls back to the high value right here, I'm just going to show you we do have some divergence. Oops, let me get the right draw tool here. Here we go, where we have a lower high here than here, while on the stochastic, I'm just looking at the green line here. And this is an indicator that we use for a slinky setup, but it's just the two stochastics, and I'm just looking at the green line for divergence. So looking here, you can see I have a higher low here than here. So this is still really whippy off the open, but if you felt comfortable in buying it, you had an opportunity to buy it off the pullback here to the high value. And so it's basically the same as looking at support resistance areas, except that market profile is based on volume. So in this fair value, that is where 70% of the volume has been traded. This is the VWAP, and generally, if price doesn't have a strong trend, it will keep finding its way back there. And anything that you do in this fair value area generally will very often be chopped. So if you're using a market profile, you can use the high value and low value areas as areas to buy off of. Buying off the VWAP here is a little bit risky because very often price will get stuck there. Obviously, you can see it bounced off there this morning, and there was actually a little bit of divergence here. Lower low here than here, looking at the green line here, higher low here than here. And you can see this real time as it's forming. Let me just go to the end of the day here, basically where we're at right now. So you can see it's real time, and you'll be able to tell when you're getting divergence as it's forming. I can't show you any right now because we really don't have any. We might get some here, but we're at the high value area here. Now this one you have to be a little bit leery of, just because we've just taken out all these swing lows. We took out this swing low, and here we had taken out this swing low. So if you're looking at it on a time-based chart and you use candle patterns, you can look for those to confirm your entry, but you're not looking to buy here yet until you see that this divergence is going to form. And so it's looking like it's trying, and I'm not interested in doing anything right now. And you definitely want to pay attention to the time of day that you're looking to take the trade. So there would be divergence, and then you basically would buy a bounce here as long as you felt confident. And I would just point out that a couple of these swing areas here might hold as resistance. So you might want to look at this on a time-based chart just to see where all the congestion is. But you can see where we've got volume at price here. This is telling us a lot of volume traded here. And then obviously this morning, ton of volume traded within this area here. We didn't attempt to move higher into all-time highs until here around 12 o'clock. So I haven't really been looking at it, so I don't know how nicely it was moving, but my guess would be probably would give you a new high like here and then pull back, and then when it took out that high right here, you get a new one and it pulls back. So that's, like I said, what makes it a little bit troublesome sometimes trading in those areas. So looking at our range chart here, and I'm just going to make this an 8 range just because it'll be easier to look at. Or I can even do a 12 range. It doesn't really matter. So you would be looking, again, as long as it wasn't too whippy, you're looking for reaction at support and resistance. And you can use also the 90 and the 200 EMA. You can use whatever you already use. You don't have to use a stochastic to spot divergence. You can use, if you use an RSI or CCI, whatever it is, it doesn't matter, MACD, you'll find that you'll be able to spot divergence on those as well. So let's see, here we get divergence at 10:12 this morning. Lower lows coming down to support. Didn't really hit support, so I wouldn't be too keen on trying to buy that, but we do have divergence there. The idea of marking areas of support and resistance is that we want to be able to take trades off of those. If we have a strong trending market, like, let's just say this afternoon, obviously we're moving higher. And so if you don't take a buy where leading into the all-time high, and you're thinking, okay, well, I missed out on that, then you're just waiting for a pullback and then, some kind of confirmation that you could buy this. So here it pops to a new all-time high up here to 36.50, for example, trades down to support area here, but we never get divergence to try to buy that, right? Because we're looking here and then we're looking to see if we're going to get that divergence, and we just don't get it. You'll see that these lows here take out these lows here, so we don't actually get the divergence. So this morning you would be looking for areas of support and resistance holding where you could take a short or a long. So for example, here I pointed out this buy here, and this is on the 8 range right now. Here, this goes into the no zone. So I do actually get divergence, but I wouldn't for myself want to take that short above my area of support that I have marked. I would wait to get in under the support area of that 95.25 and then get in. And then I'd look to the left and I'd look at my last area where price reacted, and then that would be my general area for my target. So once we get through this 88 area, and I'm missing a couple bars because price was kind of whipping around there. So if it was really like you blink your eye and we were down here already. But when we get down to support here at 80, no, I don't recommend buying support or selling resistance if it's the first test of that area for that day. I would let it test it, see if it's going to hold, and then when it retests that area, then I would look to take it. And like I said yesterday, I almost like it better when it attempts to get through and it fails, and I'm looking to take a divergence trade. Like here, for example, you get divergence and then it rolls over. So like that to me is basically a heads up that, hey, it couldn't go higher, so realistically, this short might actually work out because it could not move there. Here's divergence here in the same area. Higher highs here than here, looking at the green line, lower high here than here. So once again, same situation. I don't want to short right above support, right? I want to have room to support or get in under support. And once you get divergence, like we don't know if it's going to just pull back 1 or 2 bars or actually trade down to support. So that's why it's really important, as I've mentioned before, that you are aware of the areas where it could hold. So if I was taking this, I would look at this bar here, under that bar, but what I would definitely be paying attention to is this area where I've got my 90 and my 200 EMA basically stacked on top of each other going sideways. That's basically telling me that we don't really have a strong overall trend. So I would have to look at this area as a possible spot where price might react. And then obviously once it gets through, you're looking over here to see where price was reacting last time. Ideally, we want to get back down here to 88. Now, if the areas you have marked as support and resistance need to be fine-tuned based on price and how it's trading during the day, then adjust it. So you can see we wind up back at the high end of our no zone range here. We do have divergence. And like I said before, I'm missing some bars just because of how the price quickly reacted. My charts couldn't keep up. So, but anyway, you got divergence there. So if it's not too whippy and you're okay to take a trade in this area, you short, knowing that 7,300, the round number, is likely to react, and then you're looking down to support. Remember, this area here holding as resistance and resistance. So now we have to assume support, right? And so that's the whole point in knowing where support and resistance areas are. So you can decide if you're taking a trade in a high probability area. So, let's say that we get a short setup, whatever setups you're trading, it doesn't matter. But let's say that you're getting a short setup right above support. Does it make sense to take the short entry above an area where price could bounce? Not really. So you let it get through support, and then it can retrace back up to that area, which now would become resistance, right? Just like here, this was a resistance area, then it becomes support. I want to just show you on a 1-minute chart what the morning looked like. It was not very pretty. Here we go. So let me just get as many as I can on here. Here we go. So here's a 1-minute chart, and here's this morning, and you can see all these tails. And what that's telling you is basically indecision, no follow through, right? All these tails. That is really difficult environment to trade. When you look to the left and all you see are price bars with tails all over the place, I'm not saying don't trade, obviously, but if you take a couple trades and they're not working out, then don't keep taking them, right? This is pretty clear to me when I look at this. Also, you can see our volume here where we have this, it's big wad here. Also, further confirming that this is chop. So if you take an entry, you're not likely going to wait for a runner. So I hope that helps you guys. And if you have any questions, certainly shoot me an email. And I might do something next week to where I have like a live trading session where you guys can see support and resistance, and how you can watch for the reactions live as opposed to a recording. Okay, you guys have a great day, and I will chat with you all later.